Thank you, Mr. Chairman. Thank you all for joining us. The four of you that were at our September 16th hearing, the four federal regulators, thank you for being here. Ms. Franks, thank you for joining us on this one. Ms. Hunter, question for you. Over the weekend, a major story broke in U.S. and European media outlets, including 60 Minutes, about a trove of HSBC account holder data that reveals the HSBC's Swiss banking arm collaborated in efforts by some of its account holders to engage in tax evasion. I understand European tax officials recovered huge amounts of back taxes from and imposed large penalties on some of these account holders. I understand that our Department of Justice and IRS received this information in 2010, 5 years ago. Would they normally share that information immediately with the Fed?
Well, in response to your question, I will first say I didn't personally see the piece that was on 60 Minutes, but I can say that we really can't comment on specific investigations.
That's why I ask you, would you normally get
in
that
the
kind
process,
of information?
in a general sense, when there's an investigation, yes, we do share information when requested with the law enforcement authorities.
Share meaning you give to them. Do they normally give this kind of information to you?
It would
Quickly?
it would depend on the case. There would be a dialogue about certainly what if they are limited in their ability to share with us, they would not do that. But we provide information upon request. We generally may be aware that there's an investigation going on.
Yeah, okay, I want to ask something. I take that to mean it's a good chance that you have had this, that the Fed has had this information for quite some time. I gather investigations of some individual U.S. account holders identified by these leaks have been undertaken by IRS. My question is this: HSBC has a recent history of major U.S. sanctions and money laundering violations. They now face these new charges of facilitating tax evasion. Summarize, if you will, for the committee, what the Fed has done with respect to HSBC to pursue these tax evasion allegations, what conclusions you may have reached regarding HSBC's responsibility for these activities, and what steps you're taking with other federal officials to pursue these matters.
Okay. Well, first of all, again, I can't really speak to this specific matter that is under investigation, but I can tell you that with respect to HSBC, we have we've entered into 3 formal enforcement actions, consent, cease and desist orders, and those relate to Bank Secrecy Act and AML compliance. There's one related to mortgage servicing activities and one related to compliance risk management in general. So we have been obviously working on issues with the firm related to compliance generally. I will say that in any situation where there's an investigation, if we have evidence or we are provided with evidence that there is a violation of law or breach of safety and soundness based on activities, and especially those that might involve tax evasion, we take that very seriously. We would favor certainly moving forward and firmly committed to taking any appropriate sanctions or penalties that would accrue from the outcome of that work.
These are, as you know, very serious accusations, and in some cases more than accusations, as we found. And this committee, a lot of us will be watching the Fed's actions on this, so we will be in touch about it.
We agree they're very serious accusations.
Question for the 4 federal regulators, one question. Each of your agencies must comply with a slew of requirements when writing rules. This is a bit of a follow-on to Chairman Shelby's question. The Administrative Procedures Act, the Regulatory Flexibility Act, the Paperwork Reduction Act. These require you to publish rules for public comment, review rules for impacts on small businesses, consider less burdensome alternatives, reduce paperwork burden. You're also currently undertaking the AGRIPA review process to identify burdensome and outdated regulations. Question is this, a couple of questions, and if you just start with Ms. Eberly and work your way down. Do you think your agency adequately takes into account the cost and benefits of the rules you write? What impact would additional analysis requirements have on your ability to implement new rules? Might some of these proposals actually stop rulemaking in its tracks or slow it down so the burden is too great to move forward? Ms. Eberly, begin with you, please.
Okay, well, we certainly do try to carry out the cost-benefit analysis. Under our policy on rulemakings, we consider the costs, the benefits, and alternatives based on available data. We ask a lot of questions during the rulemaking process to garner the impact on institutions, and we're particularly interested in the feedback we get from community banks about the costs of the regulation or the ways that it would impact the institution. And we make changes based on the information that we hear. As to your second question, which was about whether additional requirements would impact that process, I think it would. Anytime you add additional requirements, it makes the process of conducting the analysis more difficult, and also would open it up to additional legal challenges. And your final question was what kind of impact could that have on the process? I think it could certainly slow the process, and certainly would make it more cumbersome and limit our flexibility.
Thank you, Ms. Hunter.
I'm not sure I have much more to add to that very complete response. I do agree that it would add complexity to the process, certainly adding extra steps, and those would tend to slow down development of rules. And that can be problematic in this sense. In some occasions, the lack of clarity between the time a law is passed and the rule is developed can impose burdens on banks as well, because they aren't sure exactly how various requirements might be implemented.
Mr. Bland.
The OCC has a very robust economic analysis impact that looks at the quantitative and qualitative factors into appropriateness of a rule. We also have this process consistent with the OMB guidance, which has been assessed. And to your last point, and the only thing else to add is it would be, the proposed rules would be impeding, could halt or slow down implementation of rules.
And Mr. Fazio, last.
I would just echo the comments of my colleagues and indicate that NCUA does take account of all the costs and benefits that we can reasonably catalog and quantify in our rulemaking process, and try to speak to that in the preambles to our rules. We also take very seriously the comments, and we find very useful the comments we receive during the rulemaking process, and respond to those in our preambles to our final rules. And that's very helpful in fine-tuning and calibrating the rules so that we pick up, we really target the rule and keep it as efficient as possible, and give alternatives to practical alternatives for creditors to comply.
Thank you, Mr. Chairman.